Reader on what themes are set to drive markets this week. Peter McGuire from XM joins us now live via Skype. Peter, great to have you on the programme on this Monday. What is on your data docket this week? What is going to move those markets, specifically the Australian dollar? What is going to get it out of that range?
Well, I made good morning, Andrew. Good morning, Kara. I made some lists here as far as notes. We've got data being released today. We've got then again Tuesday. We've got Wednesday first quarter GDP numbers. Friday retail sales. We've got those Chinese PMIs coming out today and tomorrow. So there's a little bit. It seems to be range bound, Kara, at that 77.10, 77.20 sort of range for Aussie dollar. So does it rise from here? Inflation's a big concern, as we all know, and let's see what we do as far as our banks and what happens in the US.
Yeah, look, certainly investors can't complain through a lack of data this week. There's plenty of it coming our way. Of course, we've got the RBA meeting. Pete, are you, look, obviously policy settings are expected to remain as is, but what are you going to be looking at as far as their language is concerned?
Well, I think, Andrew, everyone's saying the general consensus is that nothing happens till July as far as rhetoric. So, you know, their comments are going to be very much taken on board. We'll be reading through every phrase as you dissect the information coming forward and then get a true read as, you know, tone and what that represents. So at the present, many traders are looking for what is that unknown, or is there anything that's unforeseen that's mentioned? And that's where the general trading public take views and try and interpret messages.
Yeah, also, because we've got the GDP read as well, and by any measure, I mean, Australia has bounced back, perhaps better than any other economy, certainly in the developed world. What sort of, how are they going to be looking at that, do you think, going forward?
Well, I think, Andrew, another thing is we're up 30%, our stock market in that 12-month period. So we've really, you know, shot the lights out. It's been extraordinary as far as, you know, again, from, you know, the retail trading side. So, yeah, we'll look at the GDP. We'll also take on board what the situation is with the RBA and, you know, any noise out there. A market's toppy. Will we see a 72.50 handle over the next week as far as our ASX 200? There's every chance you might see that. We were fairly strong, fairly good result coming out of Friday with the US. I know it wasn't a big lift up, but generally we're still in the green across NASDAQ, S&P and Dow. So I think that may wash over to us and to Asia very much, you know, the first couple of days of the week. So I'm generally thinking that it's onward and upward from here for a little while longer.
And Pete, the other two commodity currencies and their central banks have now distinguished themselves as being more hawkish in the market. The Bank of Canada, the RBNZ, making moves towards that hawkish tone. What are your forecasts when it comes to the loonie, when it comes to that Kiwi dollar?
I think you'll probably see a little bit further uplift as far as Canadian dollar and the Kiwi. You know, that's sitting at about 72.60, Kara. So there's every chance you could take a 73 handle out. That US dollar's still at 90. I would have expected that US dollar index possibly to be, you know, that 89.6 by now, but it's bounced again back to 90. Everyone's keeping a very close eye on it over the next matter of days, whether you're going to see a further downdraft. Everyone's also got their eyes on NFP coming out Friday, non-farm payrolls. I don't think they're going to underwhelm like we saw in April. I think that they'll probably shoot the lights out at about a 650,000 analysts are expecting. So that's going to be an increase. Unemployment numbers drop then to 5.9% across the state. So there could be a little bit of good time ahead for us over that June month and you know, Northern Hemisphere summer.
Yeah, how do you think investors are going to read this? Because certainly as far as jobs numbers and inflation numbers are concerned in the States, everyone got it very wrong last time. Although, with that, both numbers a bit of an anomaly, do you think?
I think they were, Andrew, and also that, you know, that stimulus check that came through, maybe it put prospective employees on the back foot. They were, you know, they got, you know, money in the bank and they didn't actually look for a job over that, you know, 4-week period. So that could have been a concern there, and that could have skewed numbers a little bit. As we move forward, you know, that inflation number coming out of the States, really, I think that realisation is hitting everyone between the eyes. That's the unknown, you know, asset price appreciation, energy prices, food, and all of those other concerns that greatly impact the spending power of the wallet and the purse. You've only got to talk to people here. We understand what's going on as far as real estate across Sydney, and that general spike is, I think, if they raise interest rates in 22 or 23, it's going to put a significant hurt factor into the market unless wages grow, and they've got to grow considerably over the next 12 to 18 months. So maybe we'll all put our hand up for a wage rise, Andrew.
Sounds
good luck with that.
Yeah. All right, well, we can't not chat about gold, Pete, because I know it's been on your trading list for a while now. It tipped $1,900 last week. Are you still in the position?
Yeah, absolutely, Kara. I thought we'd get there by the end of the month. We've spanked through at 19.15. I think we got the other day. I think it's about 19.09 at the present. So I think that uplift will continue. We understand from an inflation side, stagflation is certainly also a possible issue moving forward. So yeah, gold a little bit stronger from here. I'm not going to say we're going to be 2,500, but I think 2,000 is very achievable over the next, say 2 months to 3 months, if nothing unforeseen happens. And that's the great unknown with gold. Bitcoin's an issue. All of the crypto is as volatile as ever. So let's just see whether gold continues its uplift. But I think it's stronger for longer.
You mentioned stagflation there, Pete. Why do you think there's a case that that's a possibility?
Oh, Andrew, that's what, a lot of major economists across the world are saying, that 22, 23 period inflation rises, and the other side as far as, stagnating. So do employment numbers pick up? What happens as far as global growth? All of those issues that could constrain a market, and I'm conscious of it. I'm not saying that we're going to experience it, but yeah, for the viewers out there, do some readings. Maybe we're going back to what we saw as far as the late 70s and early 80s. It seems to be very similar in as far as gold at all-time highs, equity prices, and of course, interest rates were low, but then Volcker came in. So maybe we see a return to that sort of mindset.
Yeah, maybe we're seeing some of those Bitcoin traders decide that they prefer that safe haven, that precious metal. Pete, always great to chat with you on a Monday morning. Thanks so much for joining us from XM.
Thank you very much, guys.